Smarter trades, simple rule. That's what separates the operator who lasts in this game from the gambler who comes in shouting and goes out broke. You see, speculation isn't about being busy, it's about being right. And most men can't stand the waiting, but they'll throw away their stake in the excitement of constant action. Now, tell me, are you the sort who feels uneasy if you don't have a trade on? Because if you are, the market will teach you the cost of impatience quicker than any man alive could. When I say simple rule, I mean just that. The fewer moving parts, the less chance you've got to break down. A trader who fills his head with a dozen signals, 20 different opinions, and 50 predictions ends up paralyzed or reckless. The smart operator boils it down. Watch the tape, study the chart, trust the action, and above all, protect your capital. It sounds too plain, doesn't it? But isn't it always the plain truth that slips past a crowd looking for mystery? I learned early that prices talk clearer than men. When a stock acts strong, that's because big money is making it strong. And when it acts weak, it's because heavy selling is pressing it down. Now, let me ask you, do you really believe you or I can outwit the weight of capital that moves those prices? Of course not. The trick is not to outguess it, but to recognize it and go with it. Smarter trades. Simple rule, go with the line of least resistance. You wouldn't row against the current in a river, would you? Then why on earth would you fight a trend? But don't mistake simple for easy. That's the greatest misunderstanding in speculation. The simple rule is hard to obey because it means ignoring your emotions. When you're up a little, your greed whispers to hold on forever. When you're down a little, your fear screams to get out right now. Both are liars. The market doesn't care what you feel. It only cares what the balance of buying and selling is doing. Do you follow me there? The tape is honest, even if it makes you uncomfortable. A man once asked me how to make a fortune in stocks. I told him, it's not the thinking that makes the money, it's the sitting. But how many can really sit? Most want action. They crave it like a drunk craves liquor. The smarter trade is the one you wait for, not the one you force. And waiting is the hardest work in this business. Think about it. When was the last time you profited more from doing nothing than from doing something? In trading, that's most of the time. Charts will show you what the crowd cannot hide. Higher tops and higher bottoms mean strength. Lower tops and lower bottoms mean weakness. It doesn't take a Harvard degree to read that, just the discipline to believe what's in front of your eyes. Why do men lose money? Because they let hope cloud their vision. They buy a weak stock and hope it gets strong. They sell a strong stock and hope it gets weak. Hope is for churches. In the market, you need proof. Are you still hoping in your trades, or are you waiting for proof? I've seen men go broke searching for a sure thing. They buy tips, they read rumors, they chase the news, and still they end up cleaned out. Why? Because they never stopped to ask whether the market itself confirmed their idea. A simple rule: if the tape disagrees with you, you're wrong. That's it. No debate. No argument. Smarter trades don't fight the market, they listen to it. Does that sound harsh? Maybe. But the market is the harshest teacher alive, and the tuition is always paid in losses. Capital is your soldier. Lose your soldiers and you can't fight another battle. Protect them first, make them earn only when the odds are best. That means cutting losses short, always. And yet, how many traders do the opposite? They cut profits short and let losses run. Tell me, haven't you felt the temptation to snatch a small gain because you're scared to lose it, while holding on to a loser in the hope it turns around? Every trader has, but the smarter man reverses it. He takes losses quickly and lets winners run. Simple rule. Difficult to practice, but essential. I'll tell you another truth. Big money isn't made in the day trades. It's made in the big swing. Catching the major move. Riding the trend when everything lines up. That's where fortunes are built. Not from scratching a point here and there. So ask yourself, are you trying to be busy or trying to be right? The market doesn't pay you for activity, it pays you for accuracy. Don't mistake motion for progress. Smarter trades are the ones that wait for the big opportunity and then take it with size. Patience and discipline, those words bore most men, but they're the backbone of every real fortune on the street. Anybody can get lucky once. Anybody can make a winning trade here or there, but can you do it over years? Over decades? That's the true test, and the answer depends on whether you follow the simple rules or keep breaking them. Do you want excitement, or do you want wealth? Because the two rarely come together in speculation. The crowd is always wrong at the turns. That's the other rule. When everyone is buying and boasting, the wise trader gets cautious. When everyone is panicked and selling, the wise trader sharpens his eyes for bargains. The public buys the most at the top and sells the most at the bottom. And will you be public or professional? If you can't stand apart from the crowd, you'll suffer with the crowd. Smarter trades mean thinking independently, not following the herd. Money mindset matters as much as chart reading. A man who cannot master himself cannot master his trades. Greed, fear, impatience, ego, these are the real enemies, not the market. The market only reflects them back at you. Do you know what happens when a man doubles up on a losing trade because he can't admit he's wrong? He destroys himself. And when he takes a small profit too quick because he's hungry to prove he's right, he strangles his own fortune. Discipline is wealth. Without it, no chart can save you. Let me ask you straight, how many times have you watched a stock go up after you sold it too early, or recover after you refused to cut it? Every trader knows that sting, but the smart ones learn from it. They see the mistake and vow not to repeat it. The fools make excuses, blame the market, or chase after the missed move. And tell me, which side do you want to be on, the learner or the loser? Charts don't lie, but men do to themselves most of all. They read what they want to see, not what's there. A rising stock that breaks support and rolls over clear sign of weakness. Yet the hopeful trader will tell himself it's just a pause. A falling stock that surges above resistance, clear sign of strength. Yet the fearful trader will mutter that it's too high. Smarter trades mean seeing the chart for what it is, not what you wish it was. Simple rule. Hard truth. Every great move begins with accumulation or distribution. Quiet phases where the big operators load or unload while the crowd sleeps. If you can spot those, you can join them before the crowd wakes up. That's where the edge lies, not in guessing news, not in chasing tips, but in reading the footprints of money itself. Do you see why I say watch the tape? Because it tells you where the real action is, even when the headlines say otherwise. And never forget, the market can stay wrong longer than you can stay solvent. Betting against the trend because you think it's too high or too low is suicide. A stock is never too high to buy, nor too low to sell, if the trend is still intact. Do you believe that? Many don't, and that's why they lose. They let opinions guide them instead of action. Smarter trades follow the path of least resistance, not the path of personal judgment. There's a rhythm to markets, like tides to the sea. You don't command them, you ride them. Traders who fight tides drown. Those who wait for the turn and go with it, they prosper. Isn't it strange how men accept nature's law in everything but money? They know they can't change the seasons, yet they think they can argue with a bull or bear market. Smarter trades accept the rhythm and flow with it. Simple rule, eternal law. Now, I've told you about patience, discipline, cutting losses, letting profits run. These aren't secrets, they're old truths. But the question is, why don't men follow them? Because they want something for nothing. They want wealth without effort, victory without discipline. And the market exists to punish that weakness. Do you see yourself in that mirror? If you do, then good. Awareness is the first step to change. In the end, speculation is a serious business for serious men. You wouldn't open a store and stock it with goods you knew nothing about, would you? You wouldn't run a farm without understanding crops, seasons, and soil. Yet men come to Wall Street and trade without knowing the first thing about trends, charts, or capital management. And then they wonder why they go broke. Smarter trades. Simple rule, treat it like a business, or it will treat you like a fool. I could tell you stories of my own wins and losses, fortunes made and fortunes lost. And every time, the cause boiled down to one thing, following the rules or breaking them. When I obeyed the market, I prospered. When I disobeyed, I paid. That's all speculation ever is, a battle of obedience to truth versus surrender to emotion. And in that battle, the man who follows the simple rule always comes out ahead in the long run. So let me leave you with a question. Next time you look at a chart, will you read it with honest eyes, or will you twist it to fit your hopes? Will you obey the simple rule, or will you gamble with your capital? The choice is yours, always yours, and the market will show you the cost of whichever you choose. Wait for confirmation, not hope. That one sentence could save a man years of losses if he truly understood it. The market isn't moved by your feelings, your wishes, or your impatience. It moves by the weight of buying and selling, and that weight leaves a trail in the action of prices. When you act without confirmation, you're gambling. When you wait for confirmation, you're speculating with sense. Now, tell me, which are you doing most of the time? Hope is the oldest disease of traders. A man buys a stock because he thinks it's cheap, or because a friend whispered a tip, or because he wants to feel clever. And when the stock turns against him, he doesn't cut it. He hopes. He hopes tomorrow will bring a rally. He hopes the market was just playing tricks. He hopes his judgment will be proven right. But the market doesn't pay for hope. It punishes it. Have you ever sat staring at a position going red, telling yourself, maybe it'll turn around if I just give it one more day? That's hope talking, not confirmation. Confirmation is action in the price itself. A breakout that holds above resistance, not just touches it. A stock making higher lows after a period of weakness. A trend line tested and respected. These are confirmations. They are facts, not dreams. They show that forces greater than you are moving in the direction you want to trade. Isn't it better to have the weight of proof on your side before you risk your soldiers? Or would you rather march them into battle blind, hoping the enemy will stumble? Men lose fortunes because they confuse possibility with probability. Anything can happen in the market, yes. A weak stock can rebound, a strong stock can collapse. But what is likely to happen? That's what confirmation tells you. It tilts the odds. A wise trader doesn't need certainty, he needs odds tilted in his favor. Hope gives you nothing. Confirmation gives you probability. And speculation is nothing but playing probabilities with discipline. Consider a stock in a long decline. The hopeful trader says, it can't go any lower. He buys it because he thinks he sees a bottom. But where's the proof? The chart still shows lower tops, lower bottoms, weakness on every rally. That's not confirmation, that's a trap. The smarter operator waits until the stock stops, making new lows, builds a base, and then breaks out on volume. That's confirmation. Which side would you rather be on, the hopeful man buying weakness, or the disciplined man buying strength after proof? The same applies in selling short. The hopeful bear attacks a stock because it looks too high, or because the papers call it overvalued. He sells into strength without proof the tide has turned. Then he watches the stock climb higher, squeezing him until he covers in pain. Meanwhile, the disciplined bear waits for a cleared breakdown, a failed rally, a broken trend, a lower low. That's confirmation. He doesn't argue with the tape. He follows it. Do you see the difference? One man trades on opinion, the other on fact. Hope is emotional. Confirmation is practical. Hope whispers that you deserve to win, that your idea must be right. Confirmation doesn't flatter you, it simply shows what is. And that's why it's so hard for most men to wait. They crave the thrill of action more than the security of proof. They want to feel right immediately, even if it means losing in the end. But the real operator learns to resist that craving. He waits. He lets the market prove itself before he risks a dime. Have you built that patience yet, or are you still lunging at shadows? Remember, the market is full of traps designed to lure the hopeful. A quick spike upward that collapses just as fast. A false breakdown that snaps back and rallies. If you buy or sell on hope, you'll be caught in those traps over and over. But if you wait for confirmation, if you demand follow-through, retests, volume, and sustained action, you avoid the bait. Simple rule. Don't trade the first move. Trade the second. The first move is noise, the second is confirmation. Think back how many of your losses came from jumping too quick. And confirmation isn't only on the chart. It's also in your own plan. Did you size your trade correctly? Did you set your stop where it belongs? Did you prepare for the risk as much as for the reward? If not, then you're hoping again, hoping that luck will bail you out of poor preparation. The smart man confirms his own readiness before he confirms the market's. A sloppy entry, an oversized bet, a missing stop, these are all signs of hope, not discipline. Do you see now how deep this rule runs? Patience for confirmation is what separates the plunger from the operator. A plunger bets because he wants action. An operator waits because he wants results. The plunger is satisfied with the feeling of being in a trade. The operator is only satisfied with profits. So the plunger buys because he hopes the market will reward his eagerness. The operator buys only after the market shows its hand. Which one are you training yourself to be? There's a rhythm in confirmation too. After a long base, a breakout is more meaningful than after a short pause. After heavy volume, follow-through matters more than a single tick. The longer the preparation, the stronger the confirmation. Hope doesn't measure any of that, it just leaps. But if you want to last in this game, you must measure. You must learn to read the character of the move, not just the surface. Because the market doesn't confirm in the same way every time. It requires judgment, and judgment comes from study. Don't mistake this for hesitation. Waiting for confirmation is not the same as being timid. Timid men never pull the trigger at all. Disciplined men wait until the trigger is clear, then act without fear. That's the balance. You don't want to act too soon, but you also don't want to freeze forever. The market rewards courage, but only after proof. Have you found that balance yet, or are you leaning too far to one side? The greatest operators I ever knew didn't move often, but when they did, it was always after confirmation. They didn't buy dips in a downtrend, just because they hoped it was cheap. They didn't short rallies in a bull market, just because they hoped it was overdone. They waited for the turn, then struck. And they struck hard, because confirmation gave them confidence. That's how big money is made, not from constant small stabs, but from big trades backed by proof. So the next time you're tempted to buy because a stock looks low, or sell because it feels high, stop yourself. Ask, where's the confirmation? If you can't point to it on the chart, you're gambling. If you can't show it in the action, you're hoping. And hope is the most expensive commodity on Wall Street. It has bankrupted more men than any crash or panic. Proof costs patience, but hope costs your fortune. Which price would you rather pay? Patience is the real edge in trading. A man can have all the knowledge in the world, but if he cannot sit still, he'll lose it faster than a fool with no system at all. The market rewards discipline, and discipline begins with waiting. Most traders are restless by nature. They feel naked without a position, uneasy without constant action. But speculation isn't about doing something every minute. It's about waiting for the right moment and then acting decisively. Do you really think every tick deserves your money, or is it wiser to wait until the odds lean heavily in your favor? Think of it this way. The market is a battlefield, and your capital is your army. Would you send soldiers into every skirmish, or would you hold them back until the decisive battle? The impatient man sends his troops to every minor clash and finds himself exhausted before the real war even begins. The patient man waits for the big opening and then commits with strength. Who do you suppose walks away with victory? The man who wasted his ammunition, or the one who saved it for the crucial fight? Patience means resisting the itch to guess bottoms or tops. How many traders have bought too early, thinking they caught the low, only to watch the stock sink lower? And how many have sold too soon, convinced the top was in, only to see prices soar higher? That's the cost of impatience. The market doesn't care about your eagerness. It doesn't reward you for being early. It only rewards you for being right. And right in speculation comes not from guessing, but from waiting until the tape confirms your idea. Haven't you ever noticed how most of your mistakes were born from acting too soon? A patient trader doesn't confuse activity with progress. He knows that sitting still is part of the work. Watching, studying, and waiting are just as important as pulling the trigger. The crowd thinks money is made by constant motion, by always being in the game. But in truth, Most fortunes are made by waiting long stretches for the rare chance when everything lines up. The patient man sits idle for weeks, sometimes months, if the market offers no clear opportunity. The impatient man can't bear the silence. He trades for the sake of trading, and the market takes his money as punishment. Which one are you closer to right now? Patience is what lets you catch the big swing. Prices don't move in straight lines, they move in cycles, waves and trends. The big profits come from riding those waves, not from scratching small points here and there. But to ride them, you must wait for them to form. A bull move doesn't happen every day. A bear collapse doesn't happen every week. They build, they take time, they require patience. The operator who cannot wait for the tide to turn will never ride it when it does. And yet, how many traders drown because they threw themselves into the sea before the tide had shifted? Patience is also what saves you from ruin. Suppose you miss an entry. Impatience tells you to chase it, to grab at the price because you fear being left behind. But how often does chasing lead to buying at the top, just before the reversal? The patient man resists. He tells himself there will always be another trade, another chance. He knows the market is eternal and opportunity endless. So he waits, and when the crowd that chased gets punished, he still has his capital intact. Isn't that the smarter way to live? To keep your ammunition dry instead of wasting it in panic, and think of the mental side. Impatience clouds judgment. It makes a man nervous, excitable, reckless. Patience, on the other hand, clears the mind. It allows you to see the market without the blur of urgency. An impatient trader reads a chart and sees what he wants any excuse to jump in. A patient trader reads the same chart and sees what is signals that confirm or deny his plan. Which vision would you rather trust, the clear or the clouded? Patience isn't laziness, it's controlled readiness. The patient man isn't asleep, he's alert, studying, preparing. He knows what he wants to see, and he waits until he sees it. The impatient man doesn't wait to see anything, he just acts. And that's why the patient man looks inactive, but strikes with precision when the time comes, while the impatient man looks busy but ends up exhausted and broke. Do you understand how dangerous activity can be when it isn't backed by patience? Even in holding a position, patience is the edge. Most traders cut their profits too quickly. They get nervous at the first sign of profit, and they grab it before it grows. That's impatience. But the real money comes from sitting tight, holding through the normal fluctuations and waiting for the trend to fully play out. The patient man rides the bull until it's truly over. The impatient man jumps off halfway because he can't stand the waiting. And who ends up with the bigger profits in the end? Patience is what protects you from yourself. Every trader battles greed, fear, and ego. Impatience is how those enemies sneak in. You fear missing out, so you rush. You're greedy for quick gains, so you chase. You want to prove you're right, so you force a trade. Patience blocks all of that. It makes you sit still until the market itself proves the time is right. It makes you accept that your feelings don't matter, only the action does. How many losses in your past can you trace back to impatience? More than you'd like to admit, I'd wager. A patient trader doesn't care about being first, he cares about being right. The crowd wants to boast, I caught the exact bottom, or I sold at the exact top. That's vanity, not trading. The patient operator waits until the turn is clear and confirmed. He may miss the very first point, but he catches the bulk of the move. And in the end, that's what builds fortunes, not bragging rights, but big swings captured with patience. So ask yourself, are you trading for pride, or are you trading for profit? Patience also teaches humility. It reminds you that you don't control the market. You can't demand that it move when you want. You can't force it to give you opportunities. All you can do is prepare and wait. That waiting humbles a man, but it also makes him stronger. It teaches him respect for the market's rhythm. And respect, in this business, is survival. Do you respect the market enough to wait for it, or do you still try to command it with your own timetable? Think of all the mistakes tied to impatience, overtrading, chasing, cutting winners, holding losers, ignoring stops. Every one of them springs from the same weakness, the refusal to wait. And every strength of a great operator: timing, discipline, Clarity, confidence springs from patience. You see now why I say it's the real edge. Knowledge without patience is wasted. Systems without patience are useless. Capital without patience is squandered. But patience, even with a modest system, can build a fortune if practiced long enough. Patience doesn't just keep you in line with the market. It keeps you in line with yourself. It slows you down, steadies your mind, and forces you to think before you act. It protects you from the traps of hope and fear. It helps you see opportunities that others miss because they're too busy chasing noise. Patience is power. It's the one weapon the crowd will never wield, because the crowd cannot sit still. And that's why the crowd always loses. So the next time you feel the urge to trade just to be in the action, ask yourself, is this patience or is this impulse? If it's impulse, you already know what it'll cost. If it's patience, you'll know because you'll have proof, clarity, and readiness. That difference is your edge, the edge most traders never master. Discipline over emotion builds wealth. That rule may sound plain, but it cuts deeper than any technical indicator or trading theory you'll ever come across. The market isn't a place where intelligence alone brings success. It isn't about who can draw the fanciest chart or read the longest report. It's about who can keep control of themselves when the pressure rises. A man who can't master his emotions cannot master his money. Tell me honestly, how often have your trades been ruined not by the market, but by your own fear or greed? Every trader knows what should be done: cut losses, let profits run, size properly, follow the plan. But knowing is nothing without doing, and doing requires discipline. The moment money is on the line, emotions flare up. You see red and panic. You see green and get greedy. You tell yourself little lies to justify breaking the very rules you swore to follow. That's the difference between the professional and the amateur. The amateur is ruled by emotion. The professional rules over it. Which one are you working to become? Fear is the most common thief. It whispers in your ear when you see a trade slipping. It makes you hesitate when you should act, or it makes you run when you should sit tight. Fear convinces you to cut a winning trade too soon, because you're scared it might turn against you. Fear keeps you out of good trades because you imagine ghosts in every shadow. And worst of all, fear locks you into losing trades because you're too frightened to admit you were wrong. Have you ever watched yourself sit frozen, staring at a loss that grows with every tick? That's fear chaining you to the chair. Then there's greed, the other great destroyer. Greed makes you double down on a loser, hoping to claw back what you lost. Greed makes you hold a winner long past the point of reason, only to see it collapse and wipe away your gains. Greed tempts you to take oversized positions because you want riches overnight. Greed tells you to break your own rules because you're hungry for more. And greed, like fear, always collects its fee in losses. Do you recognize how often greed has whispered in your own trades? Discipline is the antidote. Discipline cuts through emotion with clear rules that are followed no matter how you feel. You set a stop, you obey it. You plan your entry, you wait for it. You size your trade, you don't exceed it. You define your profit-taking, you stick with it. Discipline is mechanical where emotions are chaotic. It doesn't care about pride, it doesn't care about ego, it doesn't care about excitement. It only cares about survival and consistency. Without discipline, even the best strategy crumbles. With discipline, even a modest edge compounds into wealth. The market is designed to provoke your emotions. Every tick up or down is bait. When you see prices surge, greed pulls you in. When you see them fall, fear drives you out. The crowd reacts to every move like a puppet on strings. But the disciplined trader doesn't dance to that tune. He knows the market will tempt him at every turn, so he prepares in advance. He writes down his rules. He fixes his plan before the battle begins. And when the market tries to play him, he sticks to the plan. Isn't it true that your worst decisions happen when you improvise in the heat of the moment? Discipline means taking small losses without complaint. Most traders can't bear that. Their pride gets in the way. They think a loss means failure, so they hold on hoping to prove themselves right. But the disciplined man takes the small cut quickly and moves on. He knows it's just a cost of business, not an insult to his ego. Pride is expensive in this game, but humility expressed as discipline saves fortunes. Which voice do you listen to more often, your pride or your plan? It also takes discipline to sit tight. Sitting through a winning trend isn't easy. Every small pullback stirs up fear. Every headline shakes your confidence. The undisciplined man grabs the profit too soon, then watches the stock double without him. The disciplined man holds because his rules tell him the trend is still intact. He doesn't sell because he feels nervous. He sells because his system signals the exit. That patience, born of discipline, is where the big money comes from. Do you remember how many times you strangled your own profits just because you couldn't sit still? Money management itself is discipline in action. Risking only a fixed percentage, never letting one trade endanger the whole account, resisting the temptation to over-leverage, these are acts of discipline. An emotional trader always bets too big because he wants it all right now. A disciplined trader sizes modestly because he values survival above thrills. And survival is the first requirement of success. Without it, there's nothing left to build on. Do you see how discipline isn't just a virtue, it's the very foundation of trading? Discipline isn't glamorous.